Hello, would you like to boost your returns in your retirement accounts? Well, today I want to share with you how you can do that by actually selling options using the options wheel strategy. I like to call it the retirement wheel strategy, primarily because you can really ramp it up even more in your retirement accounts. And I've done that. I've actually been able to earn close to 1% monthly in my retirement account, which is like a $50,000 account. At the end of the video, I'm actually going to share with you the trades I did last month. So stay tuned and be sure to watch that part. I go over 6 trades. But first of all, I did want to mention that during this kind of down market with I think the Nasdaq was in a bear. I don't know if it's still in a bear market, and I believe the Dow is in a correction. It's really a good time to sell puts, especially if you want to do some dollar cost averaging and get some really good value on stocks, especially value companies, dividend paying stocks. So I'm kind of surprised how many people are fearful of actually selling options. If you've never sold options, I've done other videos on my channel where I kind of go over the basics, but the easiest thing to do is just to get started. Pick something that's fairly less risky. I like one in particular is Lumen Technologies, LUMN, and it's only around $10 a share. So you could actually sell one option and only need about $1,000 worth of cash or margin to actually do it. So at this time, with the up and down of the market, it really is a good time to do some dollar cost averaging and sell some puts. I know it's still kind of risky, but with the market down so much, I like to sell puts at like a 10% below what they are now. So that would almost be, especially with the Dow, which I think is close to 10% down, it'd be like being down 20%. And it's really hard to time the market. So if you can do dollar cost averaging and you can get the price of stocks at 20% off their highs or 30% off their highs, you're actually doing really well. And some of the stocks that I own, which are value companies that pay dividends, are paying really good dividends. And I'll go over a little bit about that when I go over the trades at the end of this video. Also, the fact that in retirement accounts, and I sell options in my Roth, my all my different IRA accounts, and you don't have the tax impact as you do in your brokerages, because if you end up selling and making a bunch of money on a trade, you can get hit tax wise, and you do have to keep an idea of how much you're doing in your brokerages so you don't end up having to pay huge amount of tax at the end of the year. And I do want to stress it's really important to do value investments at this time. I'm staying away from the companies like Google and Amazon. Now, I've looked at them in the past, and right now I'm still not feeling good about jumping into them. Um, I don't necessarily agree with that with Amazon, not Amazon. Actually, Apple. I feel like Apple's getting it a really it's come down quite a bit. I think it's trading under 160, maybe in the 150s, and I currently have a put at around 140 for that. So I may continue to sell more puts on Apple. I'm okay with owning Apple at this time, but some of the other high flyers I'm definitely staying away from. And then one thing I noticed is with selling options, just naturally you end up keeping more cash. And when you go through a downturn like this, having more cash ends up being really good, in the sense that I've got enough to get me through probably over a year, maybe even a year and a half to 2 years, especially if we continue to trend downwards and we go into a recession. So it's just kind of becomes natural, since you want to sell options, you want to have extra cash in your account, and it just encourages you to build up more and more cash. So at this point, I do want to thank you for joining me. The next part of the video will, like I said, we'll jump into the actual trades, but I do want to encourage you to hit that like button, and if you want to subscribe or take a look at my Patreon memberships, I've got two, and I share my trades. I do weekly calls. There's quite a bit there, so I encourage you to take a look. Everything can be found down below. And let's go ahead and jump into the next part of this video. Okay, now I've opened my spreadsheet, and this again is for February, so that's why it's showing March 1st. And at the top, it shows what the initial account value was back on September 21st, and then the initial cash. Now, the current value as of 3/1 was 51,029. Now, that doesn't seem real good. Well, you're saying, well, over 6 months, or a little more than 6 months, you only gain an additional $1,000. But you got to remember, January and February were pretty down days, or pretty down months. I believe combined it was close to 8 to 10% down in the markets. So, and what's real interesting here is the cash went from 12,511 to 15,234. So, if I hadn't been doing these trades, it would be down another 3 or 4 thousand on March 1st. So, and then here, these are what funds I have currently, or what investments I have in this account. So I've got Wisdom Tree, and I've showed it in red because again, it's down quite a bit. I think it may have been close to 80 at one point. And I've got 100 shares, so I can sell cover calls on it. I've got DVY. Now, if DVY goes way down, it's one of the exceptions. It's still pretty high, around 123. So I've done well with that. But at some point, if it dives down, I'm going to probably buy more and get that to 100. So also I could sell covered calls. Next is IGH, which is iShares Core S&P Midcap. So of course, with the midcap, it definitely has come down. It was close to 280 at one point. I think actually got up to 295, so it's down quite a bit. And then cash here you can see 15,234. And then this negative value is just the way the brokerage keeps it. It determines the value of each put and cover call at that particular time, but it doesn't necessarily mean that I'm really going to take that loss. But I like to put that in there. If you took off that 2,000 decrease because of some of these options being in the money, or having negative values, it would be closer to 53,000 or something along those lines. So um, just wanted to share that. It's a little bit confusing. So here are my actual trades, and I'll go through them one by one. So the big is big lots, and I like to trade it both in my brokerage and this Roth. This is my actual Roth IRA, and I've got a strike at 42 and a half and 35, and that's what it was expiring on 218. Well, on 216, I actually rolled it, and I kept the short strike the same, but I did widen the spread a little bit. Lowered the outer strike from 35 to 30, but I did pick up an extra $44. So this is probably, and the reason I put it in yellow is Big Lots has gone through a really tough time with supply chain. So if you look long term, it's still got a lot of cash. I believe it's gone down more recently. I think it may be as low as 36 or 37. But I do think it's going to come back, and I've been able to roll it every time. So even with it being in the money, I'm able to roll it each time. So again, I made 44 on it, which again, it's one contract. Since I only have 50 some thousand in this account, I'm only doing one contract. Whereas my brokerage, I'll do two or three sometimes. Next is LEG, and this is kind of my other one. This is Liggett and Platt, and it's a good company. It pays a really good dividend, and it's been hit hard, just like Big Lots. It's been hit hard by the supply chain, and I rolled it. It's a cash secured put at 40, and I rolled it, kept the strike price at the same, and rolled it out to March 18th, and I picked up $96. So again, not bad, and just like Big Lots, it's gone down a little bit more recently. I think it also is. I think it's like 36, 37 too. So hopefully by the time, I believe I just rolled it again. I think I rolled it again last week. So, like I said, even though these are in the money, I'm able to roll them and pick up more cash. And then IGH is a covered call. It's my only covered call for February, and I did it on 2.8, and I've had this at 280. So when I showed you up above, it's what 265, and I think at the time of this trade it was 266. So it's pretty far off. I could also have let it retire, or be expired. But it was so low, I think it was a couple dollars, and I went ahead and rolled it and picked up quite a bit of premium, $237, which was a bulk of my premium this month. And again, it's been a good investment, and I've been able to roll it and make some really good cash with it. The next one is Ford, and it's a new one I did this week. I do like to trade Ford, and it's a put credit spread at 16 and 12. So I only needed $400. Actually, I think I did three of these, so I needed $1,200. So I did three contracts, meaning the required for each contract, which required $400 for three of them. It meant $1,200. So I needed $1,200 of cash or margin in my account. But for that, I made $103 for not just shy of a month, or a little more than a month. For Yeah, for it to expire 325. Actually, I made it 228, and it expires in 325. So not bad. Some pretty good premium. The current price was 17.49. It's gone down since then. I think it's around 16, a little bit more than 16. It was a 22 delta, so it was in that risk delta factor that I like. And I've also found it's really easy to roll too. Um, so next I've got Cisco. This one actually expired, and I wrote it on two. I placed it on 222, and actually the expiration should be 318. I must have forgotten to change that. I'm getting confused. So I think I must have. Oh, maybe it was expiring on 222. No, 218. It expired anyway, so I don't know why I put the 222 here. Sorry, guys. I know that's a little confusing, but it at that time on 222 it's 56.22, so it was way out of the money. I didn't even need to close it. It was so outside the money, it was just fine to let it expire, even though in the past I've said I typically will close these. But I think it dipped and then it picked up really close to expiration. So that was one of the exceptions. I'm not sure it got up to that 85 or 90% profit that I like to close things. I think it was really close to that, or it got there right on expiration. Um, and what did I made 56.22. No, that was the price. I don't know why I didn't put the amount here on what I earned on it. Oh wait, no, it expired. So I didn't make anything this month. I didn't roll it or anything. I actually had placed the trade the previous month. So that's why I'm getting a little bit confused. So it just expired and I didn't make any money with it. And I didn't spend any money to close it. So next is Intel, and it's a put credit spread 45.35, and I just rolled it out. Um, fr- from 225 to 325. It kept the strikes the same and made another 72.40. And at that time, when I actually did the trade, it was on February 18th. It was 44.39, so it's a little bit in the money. Intel also, just like the other two I mentioned earlier, been hit by supply, especially supply of chips. I think some of the ingredients they need for chips they're having issues with. Um, so again, supply side issues. But I like Intel. It pays a good dividend. Actually, I think it's paying over 3%, which is unusual for a tech company. And I've been able to roll it pretty much every time too. So that brought me to 553 for the month of February, which was 1.09%. This is just looking at the total balance and then applying the 553 to it. So a little bit better than a 1% for the month or 12% for the year. So that's why it's such a big deal. If you look at it on a yearly return, it would be over 13%. And if you can earn 13% just selling puts and cover calls and vertical put credit spreads, that's really good just in its own right. Not even considering the investments that are in the account. Hopefully by the end of the year, they're above what they are now. So um, that's where you can really boost your returns, make some extra income. It's works out quite well, and I've been able to do this every month. One month I think I did over 2%, but I also did a trade in ARC Innovative, and one month I ended up taking a loss because of ARC Innovative. So that's why I'm talking about trying to use these value companies. I'm not doing any more trades, any new trades with ARC. I do have I think, a leap in ARC that I'll have to deal with at some point. Um, and then these are just some of the comments that I made. So I had 5 puts, 1 covered call. Um, all put positions were under $60, so these weren't expensive stocks. They're all good dividend payers. Like LEG, I think pays close to 4%. Cisco's like 2.5%. I think even IGA pays 2 to 3%, and Big pays around a 3% dividend too. Um, Good delta. I only had one new position, and it did have a good delta. And then I do not worry so much about delta with rolling. So I'd mentioned that before. Whenever I roll, I typically try to stick to the same strike price or get a little bit better and try to earn premium on it. And you kind of have to make that decision too. You need to decide, has anything changed with that company or that ETF that maybe you don't want to continue to invest in it. I've had to do that with ARC Innovative quite a bit. Is it something I still want to invest in? So, and currently I'm not doing any new positions, but I'm sticking with what I've already own or trades I've already made, which is only one put contract, I believe, and I do have one covered call. I did really well on my brokerage on a covered call, I think, last month. Um, and again, all expiring in March except for Big, which is Big Lots, which will expire in April. So again, trying to keep the expiration pretty close so I can do these trades every month and make this kind of income. Now, this over here is, I had shared in an earlier video that I compared my returns. I used to have my accounts managed by a brokerage, by a financial advisor, and I was just comparing that me selling options, I'm doing a lot better than he did, which is this 4.8%, and he managed it from 2011-15. So I encourage people, if you've never sold options, try something that's a little less risky. Give it a shot. Don't put too much risk into it. Pick a safe delta like a 20 delta or a 10 delta, and just give it a try. If you want, add a comment. If you're thinking about making a certain trade, please leave a comment below. Again, I encourage people just to get started and do it in a very riskless way, or less risk. And also, this is a good time with the market being down. You could pick up some really good investments at low prices. So thanks for joining me today. I hope you enjoyed this, and hope you have a wonderful day.